Welcome everyone to this new educational video where I'm going to explain to you one of my most recent trades on Apple. This was not an easy trade and it mainly depended on my skill using multiple time frame analysis, going from the higher time frame to the smaller time frames for my decision making, and also using some of the traps that institutions and market makers are using to get retail traders out of their position. The first thing I saw on Apple is how strong it was in the weekly chart. And finally, after this strong uptrend, Apple started pulling back. And it pulled back into the 20 moving average on the daily chart, and the drop was approximately around 10% of the stock's price. This is a huge pullback and a huge drop that happened straight without any consolidation areas. This tells me that after this much of pullback, or after this strong pullback on a strong uptrend, after we hit a support level, the stock could bounce or it could start trending to the upside, or maybe give me some momentum. Obviously, the weekly chart by itself is not enough. So I took out another chart, which is the daily chart. And you could see that on the daily chart, we dropped down into an interesting zone, a zone where buyers are interested in getting into this position, or where sellers are going to start taking profits if they were short on Apple. I could also see that for the past few days, Apple held that level and it was consolidating around this area. This combination gave me the idea that this is an area where Apple could bounce from, and this is where the stock could actually start turning around or maybe resuming its overall trend. So I decided to give it more analysis and pay closer attention to smaller time frames, and this is what I'm going to go through with you using our trading terminal replay feature, explaining how I actually execute this trade and how I determined where I'm going to have my profit target. So you could see on the 60-minute chart on Apple that we were kind of in a general downtrend until for the past 3 days, that's 7th of August, 8th of August and 9th of August, we started holding this bottom. The combination of this bottoming on the 60-minute chart along with what we saw on the daily chart and the 60-minute chart gave me a thought or an idea that today we could actually bounce or go to the long side. However, I could see that previous day was a red day. We opened around here, we closed down here, and that is a bearish day overall. And usually when we open inside the previous day, this is basically today, and we're opening here, and we're opening between yesterday's high and between yesterday's low. If we're opening in an inside range or inside previous day candle, I usually am careful about taking my profits. I do not hold on for a strong trend and I play my risk to reward. The next thing I did is I waited for the market to open, and I could see that on the 1 minute chart there is some sort of range. This is the high of the range and approximately this is the low of it. And my signal to enter most of my positions is fake breakouts. I could see that the stock opened, it broke the range to the downside, and normally if the price is bearish or the price action is weak, the stock should sell off. Instead, rather than selling off, what happened is it squeezed to the upside and it started going to the long side. That was my signal, and that is why I played it to the long side on this candle on my first attempt. Unfortunately, what happened is that on this candle around here, it pushed down and it got me stopped out. Why did it get me stopped out? Because I used the low of the range as my stop loss, ignoring the fake breaks. But seeing that it made a new 1 minute low and started squeezing to the upside, I knew that this is another fake break intended to get all the people who played it to the long side here and here. And after getting them out, the price could actually squeeze to the upside. So what did I do? I decided to play it to the long side, and I set my stop loss somewhere around the original stop loss, or you could even go tighter and set it below the entry candle. The risk to reward or your profit target depends on your risk to reward, and seeing that I played it approximately around 179.50ish with the stop loss approximately around 179.30ish, you could go wider if you want to play it safer. I realized that this is a good risk to reward for me. Apple's average true range is approximately around $3, and we already did a move of $2 to the upside. And since we're in an inside bar candle, and when I say an inside bar candle, today we're inside yesterday's range, I knew that I should not stretch it out and I should not try to aim for the full ATR. That is why I decided to bail around here. The rule that I used for my exit is the 3 consecutive 5-minute candles. I mentioned to you before when we were talking about reversals is that stocks, they usually make candle 1, candle 2, candle 3, and usually after 3 candles we have a pullback. If the stock is strong, it's going to continue to the upside. Since we are in an inside bar candle after a red candle, I did not expect that after the drop we're going to continue to the upside. Obviously there is that possibility that we're going to go to the upside, but there is also a high possibility that this is going to be a reversal or that we are going to chop around. So that was my signal to bail out of this position. So this is basically it, guys. This is one of the trades that depend mainly on your skill analyzing multiple time frames. And what I do when I analyze multiple time frames is that I start with the weekly chart and I try to build an overall bias as of what's going to happen today, what is the bottom, are we going to break, are we going to bounce. I just try to build an overall idea as of what the market is doing. Then I go to the narrower time frame, which is the daily chart, and I try to find a zone where the price is about to bottom or to bounce from or going to continue the trend from. And once I find that, I go to the 60-minute chart, which is a smaller time frame, to seek a confirmation. Is today actually a good day to play this stock or not? If it's actually good, I finally switch to the 5-minute chart and I use fake breakouts as my signal to enter. After that, it all depends on you. Make sure that you can have at least a 2-to-1 risk to reward ratio before jumping into the position. I hope you enjoyed this video. If you did, make sure to hit the like button, share and subscribe to our channel, and I'll talk to you in the next video.